Sudip Bandyopadhyay joining us on the show right now. Very good afternoon to you, Sudip. And how are you actually gauging the entire market, the news flow that we are surrounded with at this point in time? No doubt you have the Operation Sindoor that dominated the initial first 2 hours of the market trading. But then, yes, it looks like the focus now shifts back to tariffs and trade deals.
Absolutely right. I think we should also focus on that US-India FTA, which has been signed after a protracted series of negotiations. And I think this augurs well for many industries. I mean, of course, we can talk about textiles, liquor, but many more industries will benefit directly or indirectly. It's a very, very good step. And I think we are still not, because of Operation Sindoor's excitement, we are not getting too much into that, but that's a very good thing which have happened. There are, of course, a little bit of concern regarding US Fed policy announcement today. I mean, the rates may not change, but the Fed chairman's comments will be very, very carefully studied. So the global markets will be watching that as well, as things unfold going forward. By and large, we have been positive on Indian markets and we maintain our positive stance. We do believe that this bit of geopolitical instability or uncertainty will pass. It's just a matter of time. Maybe next few days, we will still have some kind of concerns and some excitement. But by and large, FIIs have started coming back to India and they will continue to maintain the momentum.
Right. Okay, that's the take coming in right now. In fact, I'm going to quickly get on board Gaurav as well from our research desk, and he's been speaking with economists and bankers. Let's try and understand what the general opinion is out there in terms of what to expect from the FOMC meet.
Well, yes, another global event to watch out for is the Fed's meeting, and let's not forget that in the last few days only Mr. Trump has said that Fed should go ahead and cut the interest rates. But when it comes to economists' expectation, what they're saying is that we may not see any kind of change in stance or in terms of interest rate from the FOMC meet in this meeting. And there are certain reasons why they believe that. First, when we talk about the entire event, what they're saying is that the commentary from Fed is going to be crucial, because in this meeting, dot plot will not be updated, and as a result, commentary is something which will drive the market. Other than that, what they're saying is that the focus will remain on the negotiation between US and non-US world trade-related talks, because this will actually drive the market. What they're saying is that we have already seen that the business sentiment and the consumer sentiment has gone down in the USA because of the trade war which is going on. And as a result, when we talk about the expectations, now inflation is expected to remain somewhere in the range of 4 to 4.5%, while GDP growth is expected to slow down somewhere in the range of 0.5 to 1%. So on the back of all these events which are unveiling, they believe that Fed will remain cautious and they will keep their stance neutral and see what is going to happen in the coming days. But definitely in this meeting, they are not expecting any kind of rate change from the Fed, at least for now.
All right, thank you so much for that, Gaurav, for taking us through what we are expecting when you talk about the FOMC meet outcome. Remember, tonight you'll have the meet outcome. And for now, it looks like they are going to hold on to the rates. Kunal, I wanted to get your views actually in some of the rate-sensitive counters back home, not linked to the FOMC rate decisions, but nevertheless, I wanted your views, especially when you talk about the realty space and the auto pack. If you have to stack up both of them, which one would you bet on?
So I think both of them. In fact, real estate pack, I would believe that they've shown clear signs of a major bottom or a support which has emerged into these stocks. Many of the stocks are looking extremely attractive. The volumes have started to pick up pace. Yes, the price actions have been a lot more volatile, but I would believe that that's a ingredient of these stocks forming bases for themselves and then building on to these bases as well as strong volumes to try and chart a trend for themselves. So I would be of the belief that many of the real estate stocks would do it. And for auto stocks, I think there are stronger evidences that the likes of Tata Motors, for example, that's a stock which I would believe is formed a classical bottom for itself. Especially at a point when the stock was at 550 mark, we flagged off that could be a very good zone for contra traders to try and go for a buy. I think even at current levels, when the news flow would start to improve for Tata Motors, I think there could be a significant upside which could be possible over the near term, at least till that point where the stock goes into that first retracement of its long-term averages, which should be at 720 to 750 mark.
Right, so that's the take coming in on the auto pack. In fact, let's actually talk about the cabinet meet, because you had the Prime Minister who chaired the CCS meeting and the cabinet meet as well today, and the outcome has been particularly positive for coal and power generation companies. Prakash is here to tell us what was discussed in the cabinet meet. Prakash?
Yeah, in a significant move, the Union Cabinet has decided to provide some sort of relief to the thermal power generation companies. In fact, that's given so not to devise Shakti policy for allocation of coal to thermal power plants. So that's an important development coming in, as the decision has potential to help these companies securing coal linkages on easy terms. Essentially, the Cabinet has given its nod to two mechanisms. Under first mechanism, the power generation companies comes under central sector or state governments will continue to get coal linkages at notified price. Of course, it will include joint venture and subsidiaries of these companies. In a second move, the Indian Cabinet has decided to provide coal linkages to any domestic coal-based power plants having a PPA. Along with that, imported coal-based power plants will also get coal linkages on coal linkages at notified price for a period of up to 12 months on auction basis. These power plants can get coal linkages beyond 12 months, but up to 25 years by paying premium at above the notified prices. That's an important development coming in. Along with that, these companies have been given flexibility to sell electricity as per their choices. Of course, these are positive development for the thermal power generation companies, and the Coal India will be given necessary instructions to implement these mechanisms going forward.
Right, okay. In fact, let's also hear it out from consulting editor Swaminathan Nair as to what he's making of this current situation.
Know for sure that Pakistan is going to hit back. Pakistan will be tempted to hit back just as deeply as we penetrated. Let us be prepared for this, and let us, at least we have the chance to say, let us get our anti-drone operations systems working. Let us see what that happens. There are dangers ahead. I think they will avoid hitting any major cities. I think they will avoid hitting any military installations. But they have a very large number of things that they can target. We have such a long border. I mean, somebody from Gift City. I mean, even Ahmedabad is, even Gift City is not that far away from the Pakistan side. So they have targets all the way from Kutch, all the way into Punjab, which they could target. And there are very large, I do not think they will go for something as critical as a power station or an oil refinery. I do not think they will try to target our oil fields in Bombay High. I do not think they will go for really critical, I don't think they will try to bomb our dams like Bhakra Nangal or so on.
Right. So that's the take coming in from Swaminathan Iyer. Let me come back to you, Sudip, and get your view on some of these counters that are actually moving in trade today, and one of them being the entire payments segment, and Paytm case in point, given the fact good strong earnings coming in, the brokerages are bullish on this one. Now it is trading in excess of about 7% or so. How are you liking this entire payments theme or space, and also Paytm, if you can talk about it?
As far as Paytm is concerned, though they declared a loss this quarter, I think it was on account of a one-time ESOP-related expense. So, ignoring that, I think they are there in terms of profitability. So it's a fantastic thing to have happened after such a long time. Paytm finally is operationally and at even PAT, PBT level becoming profitable. That's excellent news. I think the excitement also is around the expected change in MDR. While MDR is there on other kind of payments, but on UPI, MDR is still not there. And they are expecting that to happen sometime sooner than later. And this creates the excitement around the Paytm stock. And I think overall payment space will get a leg up if there is some kind of MDR introduced on the UPI payments, which has been the demand for the industry for quite some time. And end of the day, I think it's fair also. Some kind of nominal charge, even if it's introduced, I think it will benefit the industry in a big way. As far as Paytm is concerned, while it's not a cheap stock, even at current levels, from a long-term perspective, now Paytm looks interesting.
Okay, Paytm looking interesting right now. I don't know if we have, yeah, we do have Nagaraj. Nagaraj, what's your own sense of, how Paytm has actually moved from those 400, 420 thereabout levels all the way to the current 870, and what lies ahead now for the stock trend?
I think the recent downward correction in the Paytm seems to be over as 808 levels where Nifty, so where the stock has reacted very well on the upside. The overall chart pattern is looking positive. I'm expecting further upside momentum to begin this stock currently placed at the upside breakout of around 870, 880 levels. So 920, 925 is going to be the next resistance to be watched for the stocks for the near term.
All right, so that's the take coming in on Paytm, and that one is looking on the chart. Kunal, how is SBI Card looking to you? Because this one also has been in news of late after its earnings, and also the fact that you had the credit card data also coming in. Today, the stock is trading higher by about 2.8% or so. How is this one looking? Do you think that there is some sort of interest coming back in this one?
Yeah, definitely it is. And in fact, over the last 5 months, the stock has risen up quite well from I think 670, 75, which was the low for SBI Cards, to now 900 plus. Yes, in the last 1 month, there has been slight bit of volatility which has come back into SBI Cards. The stock dipped down towards I think 770, 775, and then managed to come back very swiftly about the 850 levels. So I think except for that one phase where the stock was very, very volatile, we've seen over the last 5 months the stock to be a lot more steady. Now, interestingly, the stock has come back to the last 2 years of swing highs, trading at 900 plus mark. That I believe is a very strong indicator that the stock is restarting or resetting its major downtrending cycle, because something which started off in 2021-22 where the stock went through a corrective phase. There was a pattern of lower highs and lower lows. That pattern is getting challenged now for SBI Cards, and that too on the back of volumes as well as consistency of price action. So that I believe could be a very strong indicator or a precursor that the stock is restarting its uptrend. I would believe long-term traders, long-term investors should look at the stock, because more the volume built up, more the consistency in the stock price, more the chances that the stock would trend for a prolonged period of time on the upside.
There's Bharat Forge, there's IFL, Piramal Enterprises. All these stocks are seeing a fair amount of buoyancy. And then, of course, I want to check in on Avenue Supermart as well, because, the street has been pretty split and divided post its numbers. While that day, of course, that gap down in the stock got bought into. But you've got another upgrade coming in from HSBC, downgrading it to a reduce now from the earlier hold. And the target prices have been cut all the way back to those 3,500 levels, from where I think the stock began its recovery from the current 4,500 thereabouts. It's already sub that 4,000 mark. That's Avenue Supermart. Sudip, how are you now analyzing the prospects for Avenue Supermart? I mean, the competition from QCom, that's been there for many quarters. The management has been very forthright in, setting out a warning bell also on that. But wouldn't you think that the damage is already in the price for the stock?
Well, damage to an extent is in the price, but look, Aisha, it's not a cheap stock even now. And, the margin is continuously under pressure. And the way I look at it, margins will continue to remain under pressure for the foreseeable future. The way the Q-commerce market is growing, the way the competition is intensifying, amongst the Q-commerce players, as well as the Q-commerce with the brick and mortar retailers. So the margin improvement possibility, in the short, medium term is not there. Under the circumstances, at a current valuation, I think I'll keep waiting and watching. I don't think I will recommend a buy at current levels.
Right, so that's the take coming on Avenue Supermart. On the chart, how is Avenue Supermart and Trent looking to you, Nagaraj?
Yeah, DMart is looking quite a weak. Recently, we have seen some good correction from the higher levels, and still there is no indication of any clear reversal signal on the upside bounce. Still weak. Some more consolidation is likely. Some more weakness is likely down to 3,800 levels, which is the immediate support from here onwards.
Right, and what about Trent?
Yeah. trend is not showing any strength to bounce back strongly, showing a larger bound action. 5500 has been a strong resistance, showing a range action below the resistance area. I'm not expecting any bigger up move is there at this point of time. More consolidation, yeah, range bound action is likely in the near term. Immediately around 4,800 is going to be the support for the stocks on any dips from here.
To have you on the show. Thanks as always for your time. Kunal, what about your BTST ideas?
So I'll go with Samvardhana Motherson as the first stock which I would recommend as a buy. The stock for the first time I think is looking extremely attractive in terms of a potential breakout above 140 levels. So buy with a target of 150, stop loss at 137. And the second would be a buy on Muthoot Finance, and this stock is making a comeback of sorts after taking a pause for the last 1.5 odd month, bouncing off from its 50-day moving average. So buy with a target of 2375, stop loss at 2270.
Right, so those are the BTST ideas coming in from Kunal. Let's talk about Titan and put the spotlight on that particular counter, because Titan will also be reporting its numbers tomorrow. We have Snehi to tell us what the street is anticipating when you talk about Titan Q4 numbers. Snehi.
Well, yes, a good quarter four is what we were expecting from Titan. Remember, even when the company came out with its quarter four updates, they looked like a good set of updates. On the standalone year-on-year basis, revenue was seen at 13,071 crores, an uptick of 16% year-on-year. EBITDA expected to go up by 17% YOY at 1,296 crores. Net profit also expected to go up by anywhere between 5 and 5.5% on a year-on-year basis at 828 odd crore mark. EBITDA margin, here we are expecting to see some pressure. We are penciling in this figure to be at 9.9% compared to 11% on a year-on-year basis. Some key expectations: the core jewelry EBIT margins could be impacted by high marketing costs. High single-digit same-store sales growth is what we are expecting to see, and they are also expecting a rise in finance costs given an increase in the GML, which is the gold metal loans rate for most jewelry companies, that has gone up. Remember, for Titan, this rate has increased to 4% now from 2.5% earlier, so this may have an impact on the quarter four PAT. Store addition, they've added 55 stores in quarter four, bringing the total now to 2,989. Remember, in the quarter four update, they have said that growth in quarter four they're expecting to be at 25% and overall FY25 growth at 21%. Overall growth for jewelry at 25%, watches at 22%, eye care at 19%, emerging businesses at 7%, and Carrot Lane at 22% is what they have penciled in. Key factors to watch out for when the numbers come out: any outlook on gold and diamond prices, flip from the wedding season if they've seen how this has impacted the quarter positively, if at all, demand trends, profitability across segments, and competitive intensity and product mix is going to be important to watch out for. So keep an eye on Titan when its numbers come out, but we're expecting a good set of quarter four numbers from Titan.
Okay, but is that the case for Asian Paints as well, given again fierce competition within the sector? Rabinder is here with his poll on what to expect from Asian Paints.
Well, as Asian Paint is set to announce its Q4 FY25 number, and the street is expecting a revenue at Rs 8,612 crore, reflecting a slight decline of 1.5% year-on-year basis. And if we talk about PAT, then a PAT is estimated at Rs 1,085 crore, marking a sharper drop of 13.5% year-on-year basis. And EBITDA is projected at Rs 1,565 crore, down by 7.5% year-on-year basis. So overall, street is expecting a muted Q4 number from Asian Paint. And if we look at the factors, then the decorative paints volume growth will be 4 to 5% as demand condition remains subdued, and the impact of rising competition was less, and the larger impact was due to weak industry demand. And benefit of 2 to 3% price hike at the end of Q2 is expected to be reflected in Q4 with a lower volume and value gap, and the demand remains challenging in urban while rural shall continue to improve gradually. And lastly, management commentary on outlook of industry demand revival, volume growth, and pricing competitive intensity and outlook for FY26 will be key monitorable.
Right, Sudip, this is a space that has actually been hit because of competition. That's the entire paint space. How are you looking at this one? Asian Paints has not given much of a return. This one has been pretty disappointing one as so.
Well, I think the issue of competition is real. Suddenly, I think Asian Paints have been besieged by competition, whether it's a Grasim or even the other players who have entered in the recent past, whether it's Indigo, whether it's Jindal Group. So competition is real, and competition is definitely eating into their market share, which is a matter of worry. However, the silver lining as far as the current market scenario is concerned, the oil prices coming down significantly is definitely a big positive for the entire paint industry. We know about 50% of the raw material cost is accounted for by crude oil prices, and crude oil prices coming down definitely augurs well as far as the margin and the P&L is concerned for the paint companies. So while relatively comparing with other paint companies, the market share loss will be real, but the margins going forward may improve as long as the oil prices remain subdued. That's what as far as Asian Paints is concerned. But it's a question of buying paint companies. I would refrain from that because, as you said, competition is intense and market share hasn't really settled yet. It'll take some more time before we know where things settle.
Kunal, what's your take on paints and specifically on Asian Paints? You think 2,300 is a good buying price?
Yeah, maybe I think post results, we may probably get the stock, in case if we get it, a bit lower, then I believe that could be a good level for the stock to buy, because, what we've actually seen the stock in the last one and a half odd month forming a classical base at the 2150, 2200 levels. From there, the volumes have started to increase for Asian Paints. The indicators have started to reverse for the stock price. It's now bouncing off or touching back its 50-day moving average. So I think if the stock bounces back, say post the numbers from this 50-day moving average level, this could be a very strong indicator further that the stock has formed a higher low for itself. So I generally wait out for the results to pan out, because that's the event risk for the stock. Once that is out of the play, then I believe that the charts look a lot more cleaner as well as better for the stock prices. So maybe at 2300 levels thereabout, I think the stock stabilizes post result. That could be a good buying zone.
Right, so that's the take coming in on Asian Paints. Let's take a look at some of the other counters. They are reacting to the number. MRF also is one of them, where you had the quarterly profits actually beat analyst estimates. So on back of that, you had MRF that's soaring in trade today, 4% higher for coming in for MRF. On the other hand, you also have Piramal Enterprises, higher AUM guidance coming in for that one. You have CLSA that has upgraded the stock seeing a jump of approximately 7.5% as we speak. You also have Tamil Nadu Petro Products that's come up with the numbers. You have other housing also that's come up with the numbers. In fact, that one is declining in trade. This lower margins is what has caused a concern in the analyst community. So there you go. Other housing is down about 2.3%. On the other hand, Angel One, that one is gaining in trade today because you have the April client base that has risen. So that one is seeing an uptick of about approximately 4% as we speak. But earlier in the day, we spoke to Sudip Bandyopadhyay, who is the chairman of Inam Group, and he believes that all sectors will grow rotationally in the next 10 to 15 years. He also believes that India is a growth story for next 30 years and advises to buy good companies in any sector. Listen in.
I think all sectors will rotationally grow in the next 10, 15 years. We have seen amazing recovery in, say, cement sector. We have seen health sector, become so large. New sectors like data centers, etc., are, knocking on the door. So, and they are characteristically new kind of infrastructure. So infrastructure as a play, and then it can cover road building, it can cover EPC, it can cover equipment, so on. So I think India is a growth story for the next 30 years. And, if you can keep growing at 8, 9, 10, 11% nominally, it is inevitable that, as is very well known, that when economy starts moving, how the hard things move first, soft things follow, and then, the tertiary sector of beauty, cosmetics, services, travel, all of them follow. So I think this rotational move is here to stay. Buy good companies in any sector is what our philosophy is.
Okay, that's the view coming in from Sudip Bandyopadhyay. Sudip, before we let you go, where is it that you see the next big move coming in sectorally?
Well, I think one segment where I have been positive for quite some time, but this tariff issue is confusing, is the chemicals and specialty chemical. I think this space is poised for very good growth. This was a completely bombed out sector for last couple of years, but things have stabilized there. Demand has come back. And of course, the China plus one story continues to remain strong. The only challenge is the tariff thing. Once tariff thing settles down, and we expect that to happen, I think this is one sector where if you're an aggressive investor, you should definitely look at. You can look at the leading chemicals and agrochemical and specialty chemical companies, whether it's an SRF, whether it's a Aarti Industries, whether it's a FACT. I think all these, or even UPL. All these stocks at current levels do look good from a long-term point of view, but you have to withstand some amount of volatility on account of this tariff issue.
All right, so that's the take coming in on those counters. But on that note, thank you so much, Sudip, as well as Kunal, for joining us on the show and talking about markets and the stocks that are actually moving in trade today.